Folks, the time is here. We have a lot of companies to break down, all of which just reported earnings literally in the past 5 minutes. So we're going to break them down here. Well, not really in real time. It's real time for me, not for you. But right now it's real time. It's about 4:07 p.m. on the East Coast, guys. And we're going to just dive into Alphabet, which right now you guys can see, it is down a little bit here, down about $7 after the bell, or about 4%. So we're going to start off with Alphabet, then Microsoft, AMD, Starbucks, then EA at the end, and then we'll break down the indexes later in the video. So hit the like button, guys. Make sure to subscribe. We're trying to get to 50,000 subs, and we're at like 32 right now. I think we can get to 50 by the end of the year, so make sure you guys subscribe. And with that being said, let's dive into it. So again, we had Alphabet just report literally 5 minutes ago. So this is the real-time reaction, which you can see clearly it's not a positive one for the stock. We are down a good chunk, like I said, about 4% after the bell. So let me read these headline numbers really quick, guys. Looks like adjusted EPS came in at $1.64 versus $1.59 expected. So they beat on that, and it looks like they beat on sales as well. $86.31 billion versus $85.33 billion expected. So they beat adjusted EPS and sales. And it looks like here Q4 EPS, we just said that. All right. Looks like cloud services revenue, $76.31 billion. YouTube ads at $9.2 billion versus the estimate of 9.17. So YouTube ads did beat the estimate, which is good here. Looks like search and other revenue at $48 billion versus the estimate of $48 billion. All right. Pretty much right in line right there. Looks like cloud revenue 9.19. We said that, but that beat the 8.95 billion. So I'm not too sure why we're selling off right now. We'll see what guidance is looking like, and obviously the earnings call, which as of now when I'm filming has not happened yet. But obviously as that comes out, we'll get more insight here. But overall, as we're getting the raw numbers right now, Google stock, Alphabet is selling off a good chunk here, about 4.5%. And on the 4-hour chart, let me pull this up and show you guys. Look at what we were dealing with heading into these earnings. Do you guys remember we called out this ascending triangle a couple of weeks ago, a week or two ago, whatever that was, or whenever that was, and we ended up completely breaking out. Google broke above 144.45, ran all the way to 155 in the matter of literally less than 2 weeks. And the last 13 days, Google's ran about $12 here, or about 9%. And to be honest, to be quite frank, we got a little bit overbought, pretty overbought. Some would argue way overbought, heading into these earnings. So we had a pretty good report. I mean, we beat on pretty much all these segments, adjusted EPS, revenue, right? Looking pretty good. We'll see the earnings call guidance and comments from, the management team, obviously, but we did pretty well, but we're still selling off. That means we were pretty much priced to perfection. And the earnings weren't probably as great as expected, or they weren't great enough, obviously, to push the stock even higher. So at this point, we're just selling off. And the thing is, guys, we're right by the 180 SMA again now, right at 145, 46 bucks, right? And we're still clearly holding an uptrend here. And to be honest, this is a healthy pullback on Google. If we do get buyers to come in low mid 140s, to be honest, I would not be surprised, although it's not guaranteed, obviously. Nothing's guaranteed in the stock market, but I wouldn't be surprised if we did see some buying action or consolidation in general at that point. So let me go now to Microsoft, which, again, mind you guys, I have not seen these earnings myself. This is a live reaction for me. It's now 4:11 on the East Coast. These earnings just dropped. So it looks like Microsoft is down about $3 after the bell, shooting up to 416. So this is pretty volatile right now. 416 we hit, down to 401. That was a drop of, let's see here, guys, 3.5%. Pretty big drop there. Not too crazy, but a decent drop there, which, let me see, is caused by obviously these earnings. Let's see what they did. GAAP EPS of $2.93, which beat the $2.76 expected. That's good. So it looks like sales 62 billion versus 61.12 billion. So that beat. So they beat EPS and they beat on sales. Looks like they returned $8.4 billion to shareholders in share repurchases and dividends just in the second quarter, which is pretty nutty. Looks like here Microsoft did intelligent cloud revenue of $25.9 billion. LinkedIn revenue up 9%. Looks like Azure and other cloud services revenue up 30%. Intelligent cloud operating income $12.46 billion. Operating income for the whole company $27 billion. So yeah, looking pretty solid here. I wonder what the guidance is. We'll get that in a little bit here. We'll hear the earnings call, but it looks like we got the initial spike followed by a sell-off. Now we're slowly digesting earnings, and looks like Microsoft is starting to come back up to where it closed. Maybe we do something like this potentially back to where we hit initially, 410, 415, which would put it even, farther past Apple in terms of market cap, as now they're slightly above Apple. If they run up even more here after earnings, they're going to be even higher than Apple. Not by much, but they're battling for the top company in the United States, right? We have 3 trillion, for Microsoft. Apple's a little bit under that, like 2.95. Either way, guys, now it looks like Microsoft is slowly turning more green. But yep, their earnings just came out. Some volatility here as expected. It looks like Windows OEM revenue was up 11%. Pretty good there. So yeah, Microsoft, what else is new? They keep crushing it. Now, AMD. This is going to be a big one. Are they mooning completely right now? Maybe on great earnings, or were they overbought heading into earnings and we're getting a bit of a sell-off here on maybe not so great earnings? We'll see. Let's put it in AMD Advanced Micro Devices, which, are these earnings out yet? They might not be out yet. Wait a second. Yeah. Hold on, guys. Let's not get too excited. They're not out yet. So we're going to come back to AMD, which will make it good here, guys. So you have to stick on throughout the video. We're going to get, build up that suspense throughout this video, because AMD, once these earnings drop, you already know this thing's going to go ballistic, right? It's getting ready. You guys see this right here? So yeah, it's getting ready. We'll circle back here in a second. Starbucks, SBUX is the ticker. Yep, this thing's looking pretty good right now, guys. So the company closed at $94, dropped to $90. Now it's up to almost $97. So we are up about $3 after the bell. So we are looking pretty green right now. Adjusted EPS looks like came in at 90 cents, which, wait a second, that missed the 93 cents expected, so they missed EPS by about 3 cents, and they also missed on sales. What is going on here? $9.4 billion versus $9.59 billion. Looks like Q1 comparable store sales up 5% globally, up 5% in North America, and up 7% internationally, which is nice. Let's see, they posted Q1 EPS of 90 cents on revenue of, $9.4 billion. So, look, maybe earnings were just not as bad as expected. They were probably better than expected, and the stock was beaten down. This is one that we talked about that was really beaten down heading into earnings from 107 to $91. So now we're getting a nice rebound. We're back over the 180 SMA. Who knows, man? Earnings call coming up. We could get some info there, more info, and maybe Starbucks could start its rally towards $100 again, maybe back over 100. But yeah, headline numbers pretty interesting for Starbucks. I mean, they missed, but again, the stock was super beaten down. I guess they did do well with comparable store sales globally, North America, and of course internationally. So of course that is globally, right? But yeah, Starbucks, interesting, pretty good. Add it to the watch list. And EA is, oh my goodness, collapsing. This thing got down. Oh my God, how far down did it go? Look at that, 128.50. So it dropped down about 7%. Now we've pretty much rebounded and recovered a lot of that loss. Let me see what EA did, guys. Then we'll go to AMD. Don't click off the video yet, guys. Looks like EA ended up doing revenue of $1.95 billion on EPS. Let's see here, guys. $1.07. So $1.07. Not sure if that beat. Where the heck are the estimates here, guys? So, oh no, that's wrong. My bad. Adjusted EPS. 296 versus 293. Looks like that just came out a minute ago here. So yeah, 296 versus 293 on sales of 2.37 billion versus 2.40 billion. So it looks like they beat on adjusted EPS, but they did miss on sales. Not seeing. Oh wait. EA expects Q4 net revenue of 1.62 to 1.92 billion, EPS of 20 cents to 68 cents. Why is that range so wide there, guys? Jeez Louise. But yeah, EA is not looking good. It is actually free falling right now after, or not after, but under the 180 SMA here on the 4-hour chart. And do I see head and shoulders here? Yeah, I personally do. Left shoulder, head, right shoulder, we're dumping down. You guys see that probably. So yeah, be careful with EA. Maybe it finds its footing in the 130-35 range. Time will tell. But yeah, that's Electronic Arts. And now drum roll, please. I really hope AMD's earnings are out now. It's 4:18. Let's see. I hope they're not 4:30, or else I'm going to have to wait and then edit the video. But let's see. AMD, they've got to be out by now. Yeah, it looks like they're out by now. Yep, it looks like they're out because the stock is falling to the downside. There you go, guys. What do you know? We're selling off. I told you that was, a possibility here considering how overbought it was. So let's dive into these headline numbers as they literally just came out now 30 seconds ago. No joke. So AMD reported adjusted EPS of 77 cents, which came in line with the expectations on sales of $6.2 billion versus the $6.12 billion expected. And AMD sees Q1 revenue, which this could be maybe a reason why it's selling off, $5.1 billion on the low end to $5.7 billion on the upper end of that range versus the $5.28 billion expected. So that could be a little reason why. That's a pretty wide range as well, but yeah, it's a growth company. You never know what's going to happen, right? AMD looks like what else here, guys? Data center segment revenue up 38% year over year. Client segment revenue up 62%, while the gaming segment revenue is down 17%, with embedded segment revenue down 24%. Year over year, gaming revenue at $1.4 billion versus the estimate of $1.25. So that missed that segment. Embedded revenue, 1.1 versus the 1.06 billion. That beat. Looks like they guide for, we talked about that already. But yeah, man, it looks like they guided a little bit under the estimate there. And I mean, that's all it takes for an initial drop in the stock. Now, does that mean it's going to tank for the next couple of days for sure, no matter what? Obviously not. I mean, this could be the sell-off for all we know. Then we rebound tomorrow as we get the earnings call and more insight. Or maybe it takes a couple of days to rebound even higher. But all I know is it wasn't too hard to see a sell-off coming on AMD. I mean, we saw Intel report a couple of days ago and their stock got demolished. And it got hit even more today. So Intel's now down from $50 to $42.80. It's down 15%. And it wasn't too hard. The writing was on the wall, guys. And AMD's now seeing similar treatment. But again, it could bounce back now for all we know. By the time you're watching this video, it could be in the green. I don't know. But we saw the initial sell-off, which, I mean, again, I saw that coming. But now, now it's starting to go green. So we'll see how it plays out, guys. We'll see how it plays out. Either way, that's AMD, Google, Microsoft. Let me actually pop Google up again and see where this is at. Yeah, it looks like Google's consolidating at about 145 to 147. Microsoft kind of chilling, currently around 408, which is roughly where it closed at. Starbucks, let's see if that's moving still. Let's see. Yep, it's still moving. We're at about 96 bucks per share as EA is still in the red, which, I mean, I've tracked this company for a couple of years. EA has been struggling, man. This stock has gone nowhere in 3 years. On the max chart, I mean, you guys can see it hasn't really gone anywhere since 2018. That's 6 years ago at this point. So yeah, not the biggest, I don't want to say not the biggest fan of EA. Some of their games are fun, but we're looking at the stock now. Not the biggest fan of the stock, but hey, maybe if it breaks 150, we could be getting some, more momentum there. But at the end of the day, guys, it all comes down to earnings. Is the company fundamentally doing well? Then over time, the trend should be up, right? Which in this case, I guess, yeah, it's up on the max chart. Sure, it is. I mean, it's uptrended for the entirety of its, time as a publicly traded company. But recently, again, over a half a decade, it has not done anything, kind of stagnant. So we'll see, man. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Again, we're trying to get the 50,000 subs this year. And don't forget to get up to 15 stocks from Moomoo, guys, using that link down below. Fund your account with at least $100. You get 5 stocks. And fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to $2,000, guys. Use that link down below or go to stocksurfs.com/Moomoo. Get your stocks. And with that being said, I'll catch you guys later.